It just seems as though they're using manipulation in price, manipulation in rhetoric, manipulation of prospectuses, and now manipulation of accounting. It reeks of desperation.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. This is a quick market update with CEO of Miles Franklin Andy Schectman this Tuesday, May 18th, 2021. Andy, thanks for coming back on.
Dunnigan, thanks for having me. I appreciate you being flexible with me doing an only audio today, so thank you for that very much. I'm on an annual golf vacation with friends that I go way back with. We've been doing it for about 15 years at an incredible place in the heart of Wisconsin, in really the middle of nowhere in Rome, Wisconsin. It's called Sand Valley. And for you golfers out there, it's the same ownership group as Bandon Dunes in Oregon, which is pretty darn famous if you're a golfer. I recommend that anyone come check it. It's absolutely magical here. And so thanks for hanging with me and being so flexible. I appreciate it.
Oh, we're glad to have you. I hate to bother you on vacation. I know what that feels like, and I'm sorry to do it, but I really appreciate you being willing to pop in with us for the weekly market update. And by the way, it sounds like a well-needed vacation with the intensity that you guys have been bearing up with. So, quick question for you from a viewer that was submitted, and that is this revelation that came out in the past week from the London Bullion Metals Association, LBMA, about something like 3,000 metric tons of gold, less than what they thought they had due to some accounting error on the part of one of their depositories or something. It sounds like that has rattled some of the market because of the that there's a lot less physical gold than was previously claimed to be out there. Do you think that this is significant and impactful? Do you think there's any correlation between this release of news and the recent spike in both gold and silver?
Well, I think you can see that they've been very desperate in their attempts to keep things in check. I mean, it seems to me that they're getting very close to running out of arrows in their quiver, whether it be dumping a year and a half, almost 2 years worth of global mine supply at the open on February 2nd, or in the access market, as it's called. We've talked about that before. In between New York open and London close, there's no trader, a rational trader alive, that would dump 2 years worth of global mine supply when the market is at its thinnest. It guarantees the worst execution. We saw that here again just last week or so, 35,000 contracts dumped it in the access market. We're seeing changing of the prospectus at the 12th hour, at the peak of demand. It just seems as though they're using manipulation in price, manipulation in rhetoric, manipulation of prospectuses, and now manipulation of accounting. It reeks of desperation. It reeks of sophomoric type of behavior from a group of bankers and or bullion bankers, I guess you could say, that are cornered. And I think it's when you throw into the mix, then again, the tremendous awareness that we've seen globally now on the investment side of the equation. It's different than it's ever been. That has something to do with it. But I would also argue that there's a certain segment of sophisticated big money traders. And maybe these are the same people that have been draining COMEX through massive deliveries in both silver and gold over the last 15 months that smell blood in the water, that realize that the big money is cornered, that with the June 28th changing of the Basel III, what I don't even know what we call it, the credit to equity or the equity to position, you have to have 85% behind a position. When that changes on the 28th for the bullion banks and the LBMA, things are changing, and it reeks of desperation. So do I think it had something to do with it? Yeah, I think all of these little these little pieces all fit together. And if you take a step back and look at all of the pieces as a whole, rather than in singularity, it really, to me, crystallizes what I've been thinking for a long time, that the big money is repositioning, and the big money is doing all they can to really mitigate how fast that happens. And but ultimately, I believe it will happen. And you can see that by the way that the central and the commercial banks and the sovereign wealth funds and the family offices have all positioned themselves for the last 4 years. You throw this kind of behavior into the mix, it just only adds crystallization to my beliefs.
We've also noticed, as you mentioned, with the increased retail activity of purchasing metals and the demand outstripping the supply, I think of two anecdotes. One is that we've seen our wholesalers' prices and the major distributors' prices to us increasing sometimes 4 times in the past 2 weeks, for example, on American Silver Eagles that we were looking at. The other is even our inventory sheet having a lot of red lines on it, meaning that things that are no longer in stock, but we still have some things available. One of the things about those high American Silver Eagle premiums is we've had a question from a viewer. It's like, if premiums are so high on American Silver Eagles, is there an arbitrage opportunity for a like-for-like swap right now? If people who have American Silver Eagles they bought earlier at lower premiums want to swap those in for bars or something with a lower premium per ounce, so they can end up with either more ounces or some cash out of the deal.
I will tell you that in all of my career, the very best deals that are done are either like-for-like transactions or trading gold to silver. It's the swap. It's realizing an equity in one piece and a value in another. Every single time that I have made a trade over 30 years that I look back on as being so beneficial to my clients and really to me as a businessman in gaining respect and trust from a client base, all of them center around swaps. I swapped people out of Swiss francs when it became obvious that the Swiss would not join the European Union, but had to peg their currency to the euro, or an export nation that thrives on exports would die if people had to first convert to an expensive Swiss franc, and I swapped them into gold. I swapped people from bullion to numismatics when the prices were cheap. I swapped them back into bullion when the numismatic prices got really high. We talk about the gold to silver swap. It is understanding and identifying anomalies in price. Anomalies are just that. They don't last long. They're a flash in the pan. And if you can understand, and I guess really only time helps you understand that, being around an industry where you can see what prices have been forever and to see it so far out of whack, absolutely is the question. The answer to the question actually is absolutely to the viewer's question. And I will say this, that anytime you witness an anomaly in price, take advantage of it. It's like waking up in Minneapolis in January. If it's 70 degrees, you're not reaching for your golf clubs and your lawn furniture. You realize it's an anomaly. You might go out and take a walk, but it's going to be short-lived, so you better get out there quick. Well, the same thing is true here. I actually did this myself a few weeks ago with 1/10 ounce gold eagles. I believe the bid on 1/10 ounce gold eagles, if you're trading where we make no money at all, will be 16% over the price of gold. I mean, that's ridiculously high. And I traded them into 1 ounce Royal Canadian Mint gold bars. And I walked away. I traded just over 700 1/10 ounce gold eagles for 80 1 ounce gold bars. That's 10 ounces of gold versus the premium that an industry sets based on demand. Same thing is true here with silver eagles. If you're trading $7 over the price of silver, you'll get paid currently. Now, premiums change. They go up, they go down. They're all based upon supply and demand. And, what's 7 today could be 8 tonight, could be 6. But currently, they're $7 if you're trading, if no money is made whatsoever. And if you can turn around and buy what we're going to offer on special today for $4.39 over on Wall Street Mint silver kilo bars, you walk away with a whole bunch more silver. And look, in the end, it's about number of ounces that matter, no matter what. You don't want to be penny wise and pound foolish and have all of your assets in 1,000-ounce silver bars. You want to maintain that flexibility, that liquidity. But in the end, it's number of ounces that matter. In many ways, my mentor, Richard Russell, spoke of that, and it's very true. It's not about the design or the picture. I mean, caveat, I love pre-33 numismatic gold because of that, but if you can purchase it at a level that doesn't diminish or denigrate the number of ounces you get, then yeah, it's the number of ounces that matter while maintaining liquidity. And you can have the greatest thing in the world, but if people don't want it, well, what's it really worth? So 1,000-ounce silver bar is great, but I don't know if we sold more than 2 or 3 of them the entire year of 2020. So it's the biggest bang for the buck, but on the other way, when you're trying to sell, it ain't worth it. So yes, to your viewer's question in a roundabout answer, yes, absolutely, it's worth it.
As long as we're talking about 1,000-ounce silver bars, one thing that occurred to me, when you look at the list of 1099B reportables, any silver bars in aggregate of 1,000 or more ounces in a single transaction is a reportable transaction. And you pointed out, unless it's a like-for-like swap, which is not a taxable event.
Let me clarify that. Everything is a reportable transaction, but it's a dealer reportable transaction. So anytime someone, and if it's like for like, there's no reporting. But if someone sells anything, they're always supposed to pay their taxes. Certain things trigger dealer reporting, and 1,000-ounce bar always will trigger dealer reporting. You're right. It's bars or rounds, not coins. Bars or generic rounds in aggregate of 1,000 ounces in one transaction. And since we're on the subject, let's just clarify. If you're sitting on a bunch of bars, don't call a dealer and say, I'm sitting on a bunch of bars, but I'm only going to sell you 1,000 ounces at a time so I don't have to report it. Don't do that. Just keep it to yourself and sell up to 1,000 ounces or just under at a time, just under. It's completely legal. The Rubicon that you would cross is when you sell more than 1,000 in one transaction, or if you were ever to send someone or ask to send someone 5,000 ounces and sell 1,000 ounces a day. Well, you can't do that either. So just make singular transactions, not to exceed 1,000 ounces, if in bar or round form, and you'll be fine, and you're following the law to the letter at that rate.
You already gave us a hint earlier about a weekly special, and I know your time is short today, so maybe you want to hit that for our viewers?
Yeah, absolutely. So we're going to do the brand new Wall Street Mint Kilo silver bars. They're really cool, and they are $4.39 an ounce over silver. Look, premiums are high on everything, and when you see Kilo bars selling at $4.39 over, if you've been around this industry long enough, you know it. But let me put it to you this way: when you're seeing $7 bid premiums on Silver Eagles at the same time, I used to be able to sell to the public as many as someone wanted for $2.89 over. So it's all relative. And the question becomes, does the public start to understand and accept and accumulate precious metals? Because while there's been an expansion of this industry tremendously, we're still a country mile away from the people on the street. And if everyone were to start accumulating a little bit of precious metals for the reasons that we talk about all the time and all your guests talk about, Dunnigan, these premiums will look like a walk in the park, and they'll change rapidly. Like you said earlier, you've seen premiums change many times in a week, and they do. And they do. And, the distributors who for the last 3 decades have been working on margins that barely exceed 1%, when they're hedging all of this metal at high premiums, taking the risk, paying months out, it's a business model where they deserve to raise premiums, as far as I'm concerned, because they don't know what tomorrow brings. They've had to pay up front, pay high premiums, take all the risk, do the hedging. It's not as straightforward as just getting silver and selling it. It's a lot involved. Paying up front, hedging, taking risk, taking creditor risk. I mean, you're paying people money. You don't know if they're going to go out of business, a private refinery. Republic Metals did that. We lost $400,000. Gave them a bunch of money, had stuff on order, and bye-bye, they're gone. And so, for everyone out there talking about high premiums, understand that there's a lot of risk involved in what we do. And if we didn't, then everyone would own a precious metals company. It's not as straightforward as it is. And when you talk about the wholesalers, where we get most of our product, I think they deserve to have higher premiums, because in this crazy market, we don't know what tomorrow brings. One last point I'd like to make. I mean, I've talked often about the Perth Mint, right? Well, the Perth Mint called us a week or two ago and said, sorry, the stuff we promised you next week, it's going to be another week. How do you tell that to a client without them thinking something's going on? And when you buy this stuff months in advance at the highest premiums you've ever paid, where people like yourself and others who are so kind to talk about Miles Franklin are endorsing us, and then you do the honorable thing and you do what you're supposed to do, and the Perth Mint says, sorry, it's going to be another week. It's a situation where there's a lot of moving parts done again. And I guess what I'm just simply getting at is that I have a feeling deep in my bones that you're going to see premiums continue to rise more and more and more. And like I've said for a very long time, this market's going to identify itself moving forward and on a continual basis with challenges in acquiring physical product. And those are the kind of logistical challenges that we are going to face in a world that seems to be inflating away and awash with capital. When this money, if Biden starts to talk about 44% capital gains, when money starts coming out of traditional investments and looking for a place to go, and gold and silver have been gaining steam, trying to catch up with all of the other commodities, which they will, and then some. I think very quickly it will gain the attention of value-seeking investors who have, a whole bunch of profit that they want to try to lock in and reposition before capital gains rise. So I'm just simply saying, I don't think we've seen anything yet. Honestly, something is telling me by the level of demand, how difficult it is to get supply, how difficult it is to work with the mints, that this is just going to be more of the same and maybe worse moving forward. And I say that with 100% sincerity.
Well, from a practical standpoint also, you mentioned the fact that there's uncertainty and risk that we bear when bringing in metals from the mints and the refineries and so on. Given that reality exists and people are starting to pick up on that, I've had a greater and greater percentage of clients asking what's in stock currently and paying by wire because they just want to get the thing resolved quickly and get the stuff in their hand, which makes sense from my past with reluctant preppers of, if you don't hold it, you don't own it as a principle, or always that what you have in your hand is worth more than a promise or an expectation, just realizing that these are uncertain times and there can be disruptions.
Well, it totally makes sense. And our promise is based on someone else's promise. And this is a prime example. When I say Republic Metals, they might have been the biggest refiner in the United States. And most any of us companies lost hundreds of thousands of dollars to them simply because they accepted orders and then went bankrupt. And I know it was almost $400,000 for us. And here again, okay, so you're buying $400,000 worth of Buffalo rounds, and that equates to how many orders to people? 500. And then you got to try to call all these people and explain to them what happened. But through it all, we still lose the money. And so there's a lot of risk involved and a lot of moving and juggling of parts. And you're dealing with UPS in the midst of a pandemic and all of the problems associated with shipping and with logistics. So there's a lot involved. And so when people want to talk about getting in-stock product and paying with the wire, yeah, that's as smart as it gets. And we will ship promptly on that. But here again, and you know this very well, Dunnigan, what is in stock today may not be tomorrow because the demand is only accentuating. So, yeah, we do have some stuff in stock. I know we have some maybe 14 or 15,000 Philharmonics in stock right now. We have going to have an awful lot of Kangaroos in stock. We're supposed to be in stock this week, probably not going to be until Monday of next week. We have an awful lot of stuff in stock and coming. But it's a bigger and bigger and bigger challenge that, one person can buy 14,000 Philharmonics and then those are gone until June. So I guess we'll see what happens. But that's just the way things are, I guess, in 2021 in the precious metals industry and really in a lot of industries. One last point, I was playing golf with a gentleman who is a home builder. And he's telling me that they've had to close with college dormitory refrigerators in a $2 million home just to close because they can't get appliances, that they're so far backward with supply chain stuff that they actually have to put a tiny little dorm refrigerator in just to close with the bank. And this is the supply chain issue. And when we talk about inflation, more and more and more money chasing fewer and fewer goods, well, it's going to spill over into this industry too, just like it is in so many areas right now, where go try to buy some furniture. When we bought furniture for our new home, we won't have our stuff till August, and we bought it in April. This is what's going on with the supply chain, and people should understand it, that, precious metals, it's all the same type of supply chain dynamics, but you're seeing it across the globe right now, in things like lumber and appliances and many other durable, furniture, and with what happened in Texas, what happened in Suez Canal, and on and on and on, and with COVID and inefficiency and inflation. So anyways, buckle up and right. And if you can get stuff that's in stock, it behooves you. And so, but this is the kind of advice that you're going to get when you do business with Dunnigan Kaiser, or when you do business with Miles Franklin. You're going to get someone who takes the time to explain things to you and be straight with you and be accountable when things are need to be explained, or when there's a curveball thrown at you from the Perth Mint, or when a company like Republic Metals goes out of business. I mean, there's accountability, there's accessibility, and in a world that seems to be so much in flux, that's important. You never realize how important it is until you try to call the company that just went bankrupt. And so it's good to be there when you need us, and when you really need us, that's when we'll step up. And I think those times are coming too. It's an interesting, dynamically changing time. So anyways, I'll let you run, Dunnigan. I appreciate you very much. I'll look forward to seeing you back on video on Tuesday next week.
Yeah, just underscoring one thing you said about the refrigerator anecdote. My wife and I, as you know, failed to get a home in Florida 2 weeks ago. We put an offer in, and it got overbid. So there's another asset that's being bid up. But also when we looked at the home, the beautiful refrigerator the lady had in the kitchen, we noticed this kind of rundown one in the garage, and on the home disclosure sheet it said that the owner is taking the one out of the kitchen with them when they left, so they know that they can't get a new one. They're taking their good fridge and giving you the old one. So it's just another example that underscores what you're saying. Things that are of value and are desirable are hard to get in this market. Andy Schectman, CEO of Miles Franklin, just thank you. I know you got to run. Thanks for joining us here again on Liberty and Finance for this weekly market update.
All the best, Dunnigan. You take care, my friend.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price, with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.